Which loan should you get? Which one's the best loan? Well, that really depends on you, and you do need to talk to a lender about your circumstances and your finances to figure it out. Let's go over a quick overview of some of the basic loans and what they are and why you would want to even ask about them with your lender. Conventional is the most common loan that people get, and there are different variants. So you can get a 30-year fixed, 15-year fixed, 7 and 1 arm, lots of different variations, and that's something we'll talk about in another video, and also something to ask your lender. Now, the interesting thing about conventional loans, if you are in a high-priced area, is that there's a maximum amount for the loan that you can get before you have to go into something called a jumbo loan. Jumbo loan means it's above the conventional limit. So I live in Boulder County, and Boulder has some very expensive homes. So when you're getting a loan, in 2021, they just raised the value, the minimum value for conventional loan, $654,350. So that is your loan limit. When you go above that, let's say you wanted your loan to be $654,351. Now you are in the jumbo loan, and there are different rules, and the interest rate is higher, and so it's not preferred if you're close to the conventional loan limit, is to try to get down to the conventional loan if possible. Of course, if you are buying $1 million property and you're doing a loan and your loan's going to be $750,000 and you don't have or want to spend the extra down payment to get it to $654,350 to make it into a conventional loan, that's okay. And you just know that your interest rate is going to be a little bit higher. Something to talk to the lender about. What does it mean? How does that change my payments? What is the difference here? Why would I do this versus the other? Those are great questions for your lender to compare what it would be to put more down as a down payment and get the conventional loan versus getting a jumbo. Now, if you're not in Boulder County, then the loan limit is probably lower. The standard average across the U.S. is $548,250. Check with your county to find out what that maximum amount is for a conventional loan in your area. And it's based on where you buy the property, not necessarily where you live currently. Now, an FHA is typically used for first-time homebuyers, but it doesn't have to be. FHA stands for the Federal Housing Administration, and it's a government subsidy to help ensure the loans that lenders provide to people with perhaps a lower credit, lower income, to be able to afford a house. Now, your credit still needs to be above 500. Your DTI, which is your debt to income ratio, so it's calculating, well, what debts do you have as far as school loans, car loans, other house loans, whatever debts you have that you're paying off. So your debt to income, how much income are you making? And a lender is going to help you through calculating that out so you can figure out where you are in your DTI. So for an FHA, you need to be under 50% for that DTI, and you have to be buying the home as a primary residence. So that means it's going to be your house that you're living in. Some people want to try to use the FHA loan to get their first investment property. The problem is, even if you qualify for FHA, you cannot use it to purchase a rental property. The purpose is to help people with lower incomes to be able to afford a house to live in. Now, there's some disadvantages to the FHA and there's some advantages. So FHA is great for lower income. Typically, you can get a lower interest rate and you can put less money down. So you could get as low as 3.5% currently. And that depends on your credit score. So if your credit score is a little bit lower, you might have to put at least 5 or 10% down. But a conventional loan is typically 20% down and up to 25% in certain cases, especially like with a rental property. So for FHA, it's great because you can put less money down, be able to afford and get into that house, but it has to be your primary residence and you have to pay mortgage insurance. The mortgage insurance is just throwing money away. So that's one of the disadvantages of doing mortgage insurance, and it's required for FHA loans and it doesn't go away. So what typically happens is after many years, a lot of people will switch over to a conventional loan. And by switch, I mean they're going to refinance their house. And so that when they refinance, they're now going to get a conventional loan because they have equity in the property. So now they have this 20% down equivalent, and then they can redo all the loan terms under a conventional instead of a FHA and stop paying those mortgage insurance premiums. So ideally, if you can get a conventional loan, it's preferred over FHA because there's this extra expense that you're paying. But if you just don't have the down payment or the credit score to get in on a conventional loan, this makes sense to buy a home, then this is a great program. And you can also look at other local, regional programs specific for affordable housing. And then there's the VA loan, and they are made specifically for people who have worked in the military. So they've served, or they're active duty, or it's their spouse. They could be a veteran or in the National Guard or National Reserves. Now, VA loans are great for you because you can possibly put no money down, and there's no extra insurance because the government backs this, and it's to support our military people, help our country. The key thing is to ask your lender what works best for you, and feel free to reach out to me. I'm happy to answer questions. That's what I do. I love to help people. And if you like this information and more and would like to support me, please subscribe to my channel.